Hey everybody, JJ here, Bull, Boom, Bear, Bust. Welcome to this broadcast. Today is April 22nd, 2021. We're going to check in on the job situation. The economy is bleeding jobs. Not as bad as it was previously, but things are still looking pretty dark. And we're going to go over the latest numbers that we just put out here recently. Also, we're going to talk about a weird piece of mail that I received recently. It's the metal credit card. And I'm not talking about AC/DC or Metallica. I don't know if AC/DC would be metal. I guess that would be hard rock, classic rock. Let's say Metallica or Pantera, right? Not that kind of credit card, but a metal credit card. We're going to talk about what that is. And more signs that the money printers are going to keep the housing bubble inflated for, looks like, much longer. But let's go ahead and get into the first story here. Only has an asterisk next to it. Only 547,000 new unemployment claims this week. That makes a fresh Great Sickness era low. I call it the Great Sickness. Is the sickness great that we've been seeing over the past year? No. But was the Great Depression great? No. But they called it the Great Depression. So this is a Great Sickness. 547,000 new jobless filings. Normally, you could say hip hip hooray, the economy's on the mend. The numbers dropping, less people are filing new unemployment claims, but not so fast. Remember, we only had 900 something new jobs, 900 something thousand new jobs implemented in March. So when you add up the 547,000, we're still over 2 million jobs being lost every month and less than 1 million jobs being added. So we're still headed down dire straits. So continue to brace and prepare for things to get a whole lot worse, especially for the bottom 50%. People in the low paying sector, the food industry, the services industry. And sadly, that's what most U.S. jobs are. I'm sure most of you know that by now. Well, banks and credit card companies are looking for more and more ways to entice customers to take their product. I got this offer in the mail here. I'm just going to look at the online version of this here. But this is a Mastercard Black, and it's benefit, or one of the features of this card that they're using to try to get people to take it, is the fact that it's made out of metal. This is the black PVD coated metal card. Now, when I first got it, I was thinking, okay, would this really do me any good? Now, if I keep it in my wallet's going to be heavier. So maybe if somebody tries to run up on me, I can hit them with my wallet. Maybe that'll be nice protection there to have a metallic credit card in there. But it's just kind of weird that somebody would choose a card based on the weight. And they even break it down here in the card benefits. Card weight versus the competition. This one, the Black Mastercard, is 22 grams. Other cards are between 13 and 18 grams. So you got 4 extra grams there. So I guess if I wanted to be cool and look cool for the checkout person or the cashier, I could whip out this card and slam it down on the conveyor belt in the grocery store, and bam, hey, check out my metal card. Aren't I cool, right? But not so fast. Let's take a look at this here. What does this say? Annual fee. Let's zoom in. $495 annual fee. Thank you, but no thank you. I'll use my lightweight card. Is anyone getting this card because you want to have a heavy duty metal card? You let me know. To me, it just seems weird. Let's jump over to the next story here. Let's talk about the housing market, home prices, and mortgage rates. The money printers are at it again. The market makers, the monopoly men. The money masters, mortgage rates dip again below 3%. So the high bubble home prices, looks like they're only going to go higher. We've been keeping a close eye on that market, on the housing market. We look at the 10-year yield. And actually right here on Yahoo, if we scroll up, we can go and see what's happening with the 10-year yield, because that would tell us how heavily involved the market makers are. Money printers are being involved here. So the 10-year bond dropping to 1.55%. Remember, for a while it was up around 2%. So we see what the intentions are of the money printers. Lower and lower rates, more market intervention. And banks are going to continue to lend, and it's going to be easier with the mortgage rates going back down again. And we continue to see rising prices and inflation everywhere, including home construction cost, with lumber cost skyrocketing. It's going to keep the price of new homes very high, and that's going to affect the price of all homes, because as prices go higher in one area, that incentivizes people to look in other areas. So used homes or previously owned homes, that's going to increase the demand for those. So you're going to continue to see bidding wars. Again, unless a big monkey wrench is thrown into the lending system, unless the debt monster is caged, inflation is going to continue. So you may want to place your bets accordingly. And this article just out yesterday, a big drop in mortgage rates reignites the refinance boom. So for those of you that were saying the Fed's going to lose control, or the Fed is going to allow rates to rise or make rates rise, that is not happening. So the people with cash on the side, waiting for the housing bust, waiting for the housing bubble to pop, are not liking this news. But if you're someone that's selling your home, this is good news, because you're going to still get strong offers on your home. Or maybe you're someone that just wants to cash out your home equity and go have a nice vacation, and good news for you as well. All right, I'm not saying you should do that. I personally would never borrow against my home equity unless I had an investment strategy where I'm going to put that money somewhere where I'm very, very confident that I'm going to get a bigger return versus what I would be paying in interest for taking out the line of credit or the loan. For example, and again, I'm not saying you should do this. For example, people are taking out loans, credit card advances. They're putting them in various locations, including digital assets and digital coins. The prices have been skyrocketing here recently. So people have made money enough to pay off the loan and making a lot of extra money on top of that. Again, not investment advice, but people have been doing that. And maybe I've done it a time or two in the past, but I don't recommend it. But do your own due diligence, do your own research, and assess your own risk as you will. Here, we're going to wrap this one up right here. If you're interested in more housing news, stay tuned, because in the next report or the next report after that, I've got another big housing market update, which is going to be a lot more detailed. So I want to make a whole separate video for that one. And I think it's going to kind of tell you a lot of surprising things. So come back for that. If you haven't done it already, please help us out by hitting like and subscribe and notification bell so you can come back for more. Do not miss any updates. We're heading into a very critical and important time for this country's direction as far as the economy and finance. We've got some bank heads going under the spotlight, so to speak, and going in front of Congress. We're going to talk about that also here in the next report or two. So hopefully see you here again very soon. Hope everybody's well. Stay tuned, stay well, stay safe, stay prepared, everybody. Bye for now. Peace.